The Fed just made a decision that completely flipped the script about what everybody thought was going to happen. But what is actually going to happen? A lot of people don't understand that if you do not understand what is currently happening in the market, you're going to make a bad, wrong decision with your money. But I'm here for us to break it down even more. All right, let's break it down. So, what actually happened on the 17th of June? Yes, 2026. The Fed made a decision to keep interest rates between 3.5% and 3.75%. So on the surface, you're going to look at it and say, yeah, but that's not a lot. That's boring. That sounds really boring. How does that affect me? But since this is what is going to happen, everybody expected rate cuts, especially with this new Fed chairman coming, which was Kevin Walsh. Okay, the one that just left was Powell. So this is under new Kevin Walsh's new leadership. Everybody expected rate cuts. But now he's saying that the rate will be between 3.5 and 3.7%. This is not what we expected. And what are the two factors contributing to this rate being this way? One, oil, and two, inflation. So let's talk about it. Inflation has gone up from 3% to 3.3%. That is a significant rise, right? And oil, I think oil was, if I'm correct, just before this Middle East problems, was about $56 or $57 per barrel. This went up so fast to about $113 per barrel. It has currently come down to $76 per barrel. But you know what happens when oil price increases? What do you think happens? The price of everything around us increases. Let me give you a small story. So I want to go back for Christmas, get to December, right? And last year we went back, but we're looking at jet fuel prices and looking at the tickets. Yeah, the tickets are so expensive. This is as a result of the increase in jet fuel prices. So not only is that going to be affected, that's just one area. Other areas are impacted as well. Food. A carton of peppers used to be £27 before, hot peppers. There's some point during when the Strait of Hormuz was closed, it went up to 80 something pounds. Can you feel me? So cost of living prices have actually gone up. Inflation has gone up. So everything has gone up and you're thinking, we expected these things to come down, but genuinely the rates cannot come down because of these two factors, oil and inflation. Okay, so inflation, and the bigger driver of these energy prices is the oil, is the thing that happened in the Strait of Hormuz and all the problems in the Middle East. Yeah. So now let's discuss, what does it mean for your money? Because he says we are not expecting any rate cuts soon. So if the rates actually go up a little, let us discuss what it is in for our money. First of all, our savings accounts. If the rate of interest goes up, that will be good for a high yield savings account, right? So the current high yield savings account that I use is the Trading 212 Cash ISA, which is currently at 3.6%. So if the interest rate goes up, your high yield savings account rate will also go up. Although price of food and everything is going to go up due to inflation, but your savings rate will actually go up. Now, let's talk about it. Point two, your mortgage. So now, because the mortgage rate is going up, means that it will be more expensive to get new mortgages or even to remortgage. So your mortgage is going to obviously affect your pocket, right? So you're less liquid cash in your pocket because it's going now towards your mortgage. Two ways it's going to affect us. Number three is going to affect your investment. So most stocks do not like uncertainty. In fact, the stock market does not like uncertainty. Okay, so it's going to cause a lot of volatility in the market in the short term until things, settle a bit. So when he said that on the 17th of June, we saw the S&P 500 drop 0.6%, and we saw the Nasdaq drop 0.7% that day. So we already see that the stock market reacted to that news, and the stock market does not like unpredictability. It does not like volatility. Okay, so these are things that we're going to see in the stock market. Now, another good part will be REITs. REITs and inflation hedging products like gold. Now, when these things happen, REITs are most likely to go up in value because real estate tends to hold up better when inflation is sticky, and because property value, rent goes up, the REITs will actually go up. And also inflation hedging products like gold will actually go up. We've seen that there has been a huge correction in gold from the move we made last year. And for people in my community, especially in my gold community, I have been telling us that, of course, this is educational purposes, that forget the drop. This is a buying opportunity to stack more at cheaper prices, especially as we are long-term investors. So you're going to see our REITs go up in value, and our hedging products like gold go also up in value. So now this is where I really, really want you to understand. Most people hear Fed, inflation, rate hike, and they freeze. They think, oh my God, I'm just going to wait until things calm down before I start investing. But there's never a right time to invest. There is never a right. How do you know when it's going to calm down? Can you actually tell me the date, time, and the circumstances that would make the things calm down? To what level are you tracking it at? Do you understand? So now these things are never going to feel perfectly calm. No, let me not promise you that. But what I promise you is that if you're a long-term investor, because data has shown that for every time the stock market crashed, it recovered. We saw a mini correction, actually not a mini, a deep correction in 2022. We also saw something like that in 2023. In 2025, we had the tariff wars where we saw the S&P drop about 18 to 20%. Recently, during this Iranian war, we saw the S&P drop about 10% in 2026. So there's always going to be these factors, but the fact still remains that as long-term investors, you will always do well. Most people try to beat the market by trying to time it. You can never time the market perfectly. Time inside the market is better than timing the market. Okay. So if you are sitting on the sidelines and telling yourself, oh, I'll start when things settle a little bit. Oh, I'll start when, I'm sure, you are never going to get to that stage where you're sure it's never going to happen again. Do you understand? So now on Saturday, the 27th of June, 2026, we are going to be exploring how we can get into REITs. Do you understand? REIT, position ourselves, because you don't want to be outside when the move has happened already. And as long-term investors, regardless, we are going to be positioned because we keep dollar cost averaging. Okay. So on Saturday, the 27th of June, 2026, and that's the last class for the month, we are going to be exploring investing in index funds like the S&P 500 and REITs, Real Estate Investment Trust. This real estate investment trust gives us exposure into the real estate market, and as we have discussed here, the rate increase will always and also benefit the real estate sector. Okay, so we're going to be investing in REITs, that is the income producing part of our portfolio, where this part of our portfolio gives us money or cash as dividends every month, every 3 months, or every 6 months. And we're also going to be exploring how to invest in ETFs or index funds, which represents the growth part of our portfolio. Okay, we're going to be exploring 15 individual assets, the advantages and disadvantages of these assets, how to invest in them properly, how to build a dividend occurring generating portfolio, and a recession resistant portfolio. We're going to be exploring all of that, and we're actually going to become investors that day. It is an all-encompassing investment class. I'm going to show you how to ensure that you are consistently investing without motivation, without, strength. We are going to be a disciplined investor by us automating our investments. So if this sounds like something you would like to do, and it is very beginner friendly, literally for beginner friendly investors, literally you don't have any idea on how to invest, what to do, I want to see you in class on Saturday. All right, you're going to find the link in my description for you to join and start your investment journey today. We've seen that investing is that one tool we can use for financial freedom. Nothing else, not our jobs, not savings. We can never save our way to financial wealth, but we can invest our way to financial freedom. So if you like any of this, or this sounds good to you, we're going to be exploring all of this. I want to see you in class on Saturday. Click the link in my bio, click the link in my description, and I'll see you then. Until then, please like, please subscribe. What else? If you have any comments, please comment. And if you have any questions, I would love to engage you in the comment section. Anything you're thinking about investing, pour your heart to me, and I'm here to answer any questions I can. Okay? Until next time, see you. But do not do anything about this. I always tell people that information without implementation is entertainment. I hope I haven't entertained you for the last 10 minutes. I hope I've given you something to think about for you to start your investment journey right now. So see you on the next one.